Hello everyone, it's Evan here from the Trade Risk, and this is your Stock Market Weekly update for Friday, October 20th, 2023. We get a lot to talk about in today's video. First and foremost, yields. Yields continue to force this sort of equity repricing, this pressure on stocks. We saw the 10-year Treasury yield hit just about 5%. I don't know if it officially tagged it, got pretty close. 30-year continues to also make sort of new highs there in terms of yields, aka bond prices making new cycle lows. We talked about getting close to some type of potential capitulation a week or two ago. We still haven't found it clearly. Record volumes are coming into these products. We're going to talk about that in just a little bit. Earnings season, just about to get into full swing. We got it really heating up next week. We had a lot of banks and different companies reporting this week. We had Tesla out there, Netflix, mixed results from both of those companies, and everything in between. But next week, I think we'll start to get more of those heavyweights reporting. We're going to look at some of those individual stocks as how they're looking from a technical perspective going into their reports. Gold bulls are happy though. So gold is working right now, 2 big weeks up, setting or really on pace for a nice looking bullish engulfing month. We're not there yet. So, 10 days left on the month, but certainly looks encouraging there. VIX over 20, lots of jitters going into the weekend. Of course, geopolitical events as well. And lots of selling into the close here, into the weekend. Talked about record volumes for Treasury ETFs and the Russell 2000 back to the bottom end of the range. So lots to talk about. Stick around. We'll get into it in just a sec. All right, we are back. We've got some charts in front of us. Hope everybody's doing well. Thanks so much for tuning in and joining for another episode. This is Warden TC2000. We do a lot for this platform, so if you are a trader that uses TC2000, if you haven't checked out our website, we've got a storefront full of indicators, scans, and all kinds of cool stuff built out, some free, some paid, and some custom that we can build things for you. So check us out at thetraderist.com, click on the Warden TC2000, and see if anything is interesting to you. We're going to get into it now with our index sort of dashboard here, and you can see if you follow my mouse, right hand side, 1 week returns, pretty ugly action and pretty broad based. I mean, the Dow Jones on a relative basis, best house in the neighborhood, but down 1.62%, not a great place to be. Everything else was down 2 or 3%. Nasdaq getting hit the hardest here, almost 3%. You can see that it was, racking up some kind of rally attempt here when we started the month of October. It's given most of that back. It's negative on the 1 month return. Volatility indices here, something we talked about at the top of the show. This is the first time we've had the VIX over 20 going into a weekend since March. So about 6 months ago, 5 months ago, earlier this year. You've got Nasdaq vol, which is up around 25, and you've got VIX, the S&P, 21.36, both up about 2.5 points. And just look at the action this week in terms of markets. I mean, we did start up on a positive note on Monday, a little bit of kind of mixed bag on Tuesday. But then if you look at these charts here that just are tracking the intra-week action, everything was straight down basically on the second half of this week. So lots of fear out there, sort of a depressed type of market right now with lots of things going on. Let's take a look at the sector breakdown, and you can see only 2 sectors this week in the green. It was energy and it was consumer staples, and third spot was communication services, but was down 0.82%. So there are only 2 spots that were really kind of shining green. Everything else in the red. On the worst hit here was real estate, down 4.63%. Mortgage rates up at 8%. Home builders struggling to kind of make ends meet as well with buyers. Consumer discretionary was down 4.5%. And then the financials were down 3%. Financials really kicked off earnings. So we had a lot of sort of glimpse of insights from a lot of those big mega cap kind of financial institutions. And the market reaction, even though the numbers I think were decent or in line with expectations, still the market did not treat them well in the action afterwards. So that was your breakdown there on the sectors. If we take a look at our smart trend filter indicators, it's one of the things we've built out for TC2000 users and actually TradingView. We do have this built as well. Measures price and volume across time and really just helps smooth out trend, kind of path of least resistance here. And we've got this on all of our spider sector ETFs to just give us a glimpse of market market breadth and trends and strength. And you can see basically almost everything is kind of down and to the right. So it gives you just that quick at a glance visual that things aren't so good here over the past, call it 3 weeks of trading. You've got communication services, which is trying to buck the trend a little bit. You've got energy out here, which is still printing some green dots. But now you've got technology, which was holding up, starting to roll over, hasn't quite fully printed a sell signal yet, but things are looking a little bit dicey here. If we take a look at market breadth a little more closely, if we go down to the bottom hand here, you can see this is our tracking of stocks hitting 52-week highs and stocks hitting 52-week lows. And again, if you're a bull on this market, you want to see more new highs than you get more new lows, and you're not seeing that right now. In fact, if you look at the number of stocks hitting 52-week highs, you've basically flatlined to, just about a dozen or so stocks that are up there at highs, probably more on the energy side and maybe utilities, but not many stocks are out there pushing and expanding to new multi-year highs. On the flip side, number of stocks at 52-week lows starting to uptick again. So remember, last 3 weeks ago, we had this reading here where we had this big spike on October the 3rd. And it depends what charting platform you're looking at. There's I don't want to get hung up on the specific value here, but you had a big spike up in the stocks hitting 52-week lows. Then it started to dry up, gave us a little hope here, right? After the beginning of October, we kind of marked that low. We started to dry up on the number of stocks hitting 52-week lows. And, here we are again, right back up to flaring up with 500, 600, 700 stocks in the NYSE hitting new lows. So this is, again, a problem here as the market rolls over, as breadth continues to deteriorate. If we look at our percentage of stocks over a 200 period simple moving average, we're back down to about 25%. And if we look at the stocks hitting a 50 SMA, above 50 SMA, so stocks that are trading over 50 SMA, we're if you want to try and glean a little bit of hope here, you could say that we're starting to put in a little bit of positive divergence, right? So if you kind of think back to where we were about 3 weeks ago when we marked the low in October in the NYSE or in the S&P or in the Qs, whatever you want to look at. But about 3 weeks ago when we traded down and made a new kind of pivot low, you can see that in terms of this breadth indicator here, in terms of the percentage of stocks above 50 SMA, we are higher. We are trying to diverge positively as we come back down and retest it. It's marginal. I'm not trading off of it or, really hanging my hat heavy on this. It's just an observation. So do that, use that as you may. We'll see how this action continues as we potentially retest this level more firmly next week. Let's move on to IBD. So IBD, shout out to them, Investors Business Daily. They are a sponsor of the show. They help make the show possible, and you can support them. You can support us with a link in the description of this video. You can get access to their digital subscription. So this is the top 10 in their IBD 50, and you can see it was a pretty tough week for them. So there's a couple of new stocks on this list, a couple of reorders here. So RELY, that's the number one IBD 50 stock right now. It was green this week. Everything else though is red. You can see 1 month returns much better here for this list of stocks. So shout out to IBD here. And again, you get that link in the description of this video. Let's move along to commodities here. So it was a pretty good week for the metals. Silver was up 3%. Gold was up 2.66%. Oil was up as well. So over 2% as well. DBA also positive this week. So commodities were a decent spot to hang out, although I hate to use that in a broad base because natural gas, it's a commodity, was not a great place to be. We'll look at that chart later. This thing's been all over the place, but another bit of a rug pull there over the past week or two for natural gas, down 10%. So last but not least, treasury yields. This is, again, my opinion, the front and center story. Of course, everyone's got their attention on it now, but 30-year treasury yields, 10-year treasury yields, 5-year treasury yields, all breaking out to new cycle highs here. So again, this is pretty much covered everywhere at this point. I don't think anyone is, it's not a new story, but this continues to put a lot of pressure here. It's that long end of the curve, which is now moving up and accelerating up. And we're going to talk about that in just a little bit. Move index up into the 130s, but pretty much everything up here is up and to the right. So let's get into it. Let's get into some price action here. We're going to start it off with the S&P 500. This is a pretty ugly looking chart here. So for the S&P 500, this is the roadmap that we've been looking at for quite some time. Again, I like to keep things extremely simple with my charts, really kind of just measuring and mapping horizontal supply and demand levels. For those of you who have tuned in for a while, you know that's kind of how we like to do things here. Keep it very simple and pay attention to what the market respects. And really this 4280 zone, 4300 has a lot of price memory going back over the past year or so. We've been consolidating right at this level here. So for 4 weeks in a row, now it's 4 weeks, we've been dancing in this zone here, but this week certainly looking pretty ugly here. We had a gap up to start the week, and we basically, you know, attempted to move up, tried to take out last week's highs, failed pretty magnificently, and then just sort of rolled over and closed at the dead lows. Heavier volume, kind of a very sort of just bleak picture here, no matter how you look at it, just objectively from a TA perspective. Now, on the daily chart, if we drill in a little bit closer here, you can kind of see what went on. You know, we ended up sort of bottoming out here back again at the beginning of October, right at the end of September, beginning of October, right around this 4220 zone. We had this nice kind of, you know, bounce relief rally that occurred on that Friday the 6th. We ratcheted up a little bit, you know, went sideways for 4 days, and then 3 days of hard selling right back down to these lows. So, you know, if you want to be an optimist here, here's kind of the optimistic scenario is as sort of the title of this episode is, can earnings save us? I mean, that's, in my opinion, one of the things you're looking at here going into next week is you've got some heavyweights reporting earnings. Are those numbers good enough, right? Is it telling a strong enough tale here that companies are still profitable in this environment? And can we, you know, actually rally after some of these reports to put in a low here or a kind of a double bottom at this this earlier October low? That's really what you're looking for. The other, you know, sort of slightly optimistic thing is you're looking to see, you know, did treasury yields bottom here, right? I mean, was Thursday the capitulation day, the heaviest volume day for a lot of these flows here on IEF, TLT? Just a tremendous amount of shares trading hands here and volume coming through these markets. I mean, if you're a believer in those two things, that, hey, maybe we got you know, yields finally topped out, maybe earnings are going to be good enough, then potentially you're all over trying to buy at the recent October lows here for some type of double bottom play. So that's the optimistic scenario. That's a must be proven scenario, though. I mean, we can speculate, we can plan for it, we can keep an open mind about it, but for all we know right now, we've got the market that is just cascading lower here, and it doesn't, you know, we went out the week at the lows, so with a new kind of cycle low here, right? This is the lowest close that the S&P has made since, you know, going all the way back to June of this year, and we are now at you know, approximately 8% from the highs made in July. So that's really where you're at here. A little bit oversold in the short term, coming back into prior support. Do you believe in these lows? Are you waiting and watching here? Are you picking some spots and some strong stocks at these lows? That's something that you have to think about here. Otherwise, you know, let's see how this market handles it on Monday, right? And of course, you know, we have all the sad, unfortunate geopolitical events that are going on here. A lot of, you know, the weekend fear and the selling going into the weekend could just be a, you know, hey, we need to, you know, get cash settled up because we don't want to take any weekend risk with everything that's escalating over there. So this is, you know, really the kind of crosshairs that the market is juggling right now. And there's lots of cross currents. There's catalysts in both directions. So for S&P, again, if you want to keep things simple, I like it over 4,300, right? I like it over 4,300 if it can, you know, hold these lows, get back above this prior inflection zone. Right now we're below it, so you have to just be a little bit cautious with that. You know, if we can put in some type of gap down Monday and a strong reversal following some earnings announcements on some heavier volume, that would be some great encouragement in the short term that maybe we can actually hold these levels, but we need to see it actually happen. Right now, sellers are unequivocally in control of this market. Let's take a look at Qs here. pretty similar situation. You know, we had the October lows, we got a little bit of a bounce off of them, but we're now just kind of rolling right back over, and we're coming back down into this zone. Weekly chart here, again, I would say looks maybe a little more optimistic, looks a little better here, as you know, we're kind of in this band still. I don't like to ever draw things super precise. I'm just looking at, you know, kind of this general zone, and we're right back to it. Again, I don't like when markets come slamming back down into former support on heavier volume. So that's a strike against, you know, kind of the technical picture here. But generally speaking, you know, if we start losing this 350 to 355 zone, again, glass half empty, and I get a lot more pessimistic on this market. So similar comments, cues, lots of these big heavyweights are starting to report next week. And, you know, will those reports, you know, will that be good enough to keep the, you know, kind of the lows in for this market? I think that is the big question, right alongside treasuries, right alongside geopolitical stuff. So lots of things that can affect this market. Speaking of weak kind of breakdowns here, Russell 2000 coming into some big zones. This is a year and a half now that it's coming back into some prior support. It's not quite at those levels, but it's getting pretty close to those 2022 lows. It's been selling off pretty much in a straight line, down 16% from July, August time, where it got as high as about 195. So for you range traders, you like selling iron condors or sideways ranges. I mean, this has been a great kind of moving, you know, going nowhere type of move here, up and down, up and down. So Russell 2000 back to the low end here, heavy volume coming in, again, oversold, much more oversold than some of these other parts of the market for sure. So that is really the big heavyweight market indices here for the US. Let's take a look at some other things going on. We got the VIX closing at 20, over 20, almost 22 into the week here. So you've got a nice kind of, you know, move, bid, fear, you know, kind of bid appear in this market now. And that's, you know, again, if you're contrarian here, that's a good thing. There is fear out there in this market. So when there's fear and people are buying protection, you know, this is typically where you can see the highs get put in for VIX. I would not want to be playing that per se just yet myself personally, but there's definitely some fear out there from 15, you know, from as low as 15.6 last week to up to 22. That's a pretty good move there, 6 points in the VIX. So let's see again just how the market reacts Monday. I personally don't want to be a hero either, trying to top tick this or say that it's safe to buy. I think that's semi reckless at this point. IEF, we sort of talked about this already. Again, this is the 10-year treasury bond, new cycle lows here, heavy volume coming in on these treasury instruments. I think actually TLT is what was breaking records, not quite the IEF. I mean, if you look at TLT, this had 87 million shares trade hands here. So that's pretty impressive. I mean, just earlier this year, the average volume in this was about 20 million or so. So you had, multiple days at, 60 plus volume here, million shares of volume. And of course, there's other treasury bond ETFs. There's just, it's not just TLT, but clearly when you look at drawdowns here, and again, I don't think this is adjusted for dividends per se, but it's basically been cut in half here from the peak not too long ago. So TLT continues to see that pressure again, like we talked about last video. Good news is for you dividend investors, for you retirees or fixed income folks, you can now get 5% plus on a 20-year bond. So that is pretty impressive, and that continues to increase its yield as those bond prices get obliterated. Let's move on to gold here, which is doing very well in this environment. Look at these two back-to-back weeks, up 5.38% last week, up another 2.66% this week, both on heavier volumes. Take a look at this monthly chart. I know this is a chart crime here. You can't look at monthly candles before the, while there's still 10 days left. I get it, but look at this beautiful monthly candle shaping up here for gold. You know, if you're a very long-term investor, you get this big move up from the lows of from the December of 2022 up to the first half of this year, right? You had this 28% rally in gold. You had about 6 months of pullback and retracement, and now here you are again, getting back off to the races, back to the top end of a multi-year pattern here, and looks pretty good. Nothing goes up in a straight line. It just covered a lot of ground, so I'm not advocating people go out and buy this right now, but it certainly has a good long-term structure look to it. GLD, congrats, bulls, on that one. Let's take a look at oil, which is also recovering. So remember, 2 weeks ago, we talked about this, the big sort of reset, the big decline here in oil is down 8% in that first week of October. And here we are again, that magical bid appearing. And of course, you know, kind of getting back up towards those highs, almost traded this entire week out now. Daily chart here, you can see back up towards this recent highs here. We'll see, you know, clearly some price memory back up at the September highs. We'll see how it handles it so far. You know, we haven't quite gotten up there, but certainly a lot of eyes will be on that level if we can get a little more push early next week. So that, I think, covers all of the major kind of macro sort of asset classes I wanted to look at. Let's take a look at some individual stocks. Netflix reported earnings. This is one of the good ones yesterday or 2 days ago, up 16%. Here's a weekly chart of Netflix. Again, time frame matters, and you know, a weekly chart I think is a forever chart for some of the short-term traders out there, but you know, if you look at it on this longer term scale, this stock bottomed out in 2022. It's been in a general uptrend. It was clearly getting a little bit long in the tooth, had a 29% correction from the July highs to the recent lows. But here we go, big spike in volume, kind of a, not quite a bullish engulfing bar, but a pretty good weekly bar that got put in here following earnings. Let's just continue to monitor this gap. Again, I don't advocate chasing after such a big short-term move, but watch this, you know, watch this earnings gap, see if they can defend it, and that could be interesting. Tesla reported earnings this week, and it was the exact opposite. So this is a much more bearish, awful looking weekly bar here, down 16% on the week. Not tremendous volume, and once again, kind of similar to, well, I guess the pattern has taken place over a different length of time. It did take out its, I was going to say it's almost retesting its former lows, but these lows were taking place in August. So it's kind of coming back to this August pivot, certainly undercut it a little bit here. There's got this gap down. It's oversold in the short term. In fact, I do, our short-term trading system did take a long position in this on Friday. Again, very short-term system. It could be out as quick as Monday or Tuesday, you know, Tuesday. So just be aware, it's very short term, but it did take a position in Tesla here on Friday. So we'll see how that shakes out. Short term bet, but you know, a little oversold in the short term. Earnings reaction was obviously not too pleasant, and I won't get too much into the fundamentals on that. XLF, this one here. So financials, spider sector ETF, had a lot of earnings out this week. Bearish, almost another bearish engulfing sort of week or breakdown week, outside week. And again, you can see just kind of nowhere for financials, and kind of makes sense. We had inverted yield curve, kind of a weird environment for a lot of those financial institutions, but mostly still in a holding pattern here. No big change. So ugly action immediately, but not a whole lot has changed. Let's take a look at some of the candidates reporting earnings next week. Amazon is the first one here. Again, this looks pretty dicey. Again, I think it just goes back to this, can earnings save some of these stocks and the market? Amazon being one of them. 3-4 weeks sideways now in a very tight, orderly sideways range. Looks like a kind of a potential bear flag that could get real ugly here. If it starts losing 123 on the downside, look out below. If we can hold in there, if earnings are good enough, if we can start holding the level of breaking out above 131, 132, then you have a totally different story here. So let's pay attention to how this company reacts following earnings, but certainly it's kind of coiled up here and ready for a move. Google also reporting earnings this week coming up. You can see the picture here looking a little bit better. Google has been performing technically a little bit stronger. It's still in a general channel to the upside here. It's been selling off for a few days here, but certainly in a better spot than Amazon in terms of its technical picture going into earnings. Of course, earnings is a catalyst in its own and can change technicals pretty quickly, but generally speaking here, looking a little bit better. Last but not least, Meta also reporting earnings this week, and kind of similar to Google, this one's been holding up a lot better as well, very much in this broader uptrend that it's been in after bottoming out in 2022. And you can see again, weak over the past 5, 6, 7 trading days or so, but still trading pretty much near its cycle highs. In fact, tried to make new cycle highs just about a week ago. So pretty impressive there. Those are some of the big candidates, some of the big heavyweights that we're going to want to pay attention to next week. So that is what I got for you this week. Lots out there, lots of cross currents, lots of potential kind of landmines here and there. So hopefully everybody's doing well out there. Let me know your thoughts, what I missed, what are you paying attention to this week? Do you think the markets can bottom here at these former lows? Do you think we are getting a little bit of a washout here in the SPY and the Qs as we come back down and retest? Or do you think we're just going to cut through and leg lower? Let me know your thoughts in the comment section below. Once again, thank you so much for tuning in every Friday, these long form market analysis videos. Got links in the description, Warden TC2000 tools, indicators, scans, all that cool stuff. And we got IBD also in the description of this video. Support the show, support IBD. Thanks again. Have a great week. We'll see you back here next weekend.